In this video, I'll be covering risk management and how you'll never blow up your account trading my system. Essentially, what risk management is knowing how much you're willing to lose on any given trade. If you're buying a stock, the most you're ever risking, as long as you're using just the money that's in your account and not loaned money, which I'll be going over in a little bit, is 100%. If you invested $100, the lowest price the stock could go to is $0, and then you would be losing all of your money. A stock can also get delisted, and in that case, you sometimes will also lose all your money. It just depends what happens on the stock. If you're buying and you're not losing leverage, you're only risking what's in your account and never anything more than that, technically. But when you develop a system, you also want to assess risk management levels at where you would get out if you were to be taking a loss. I do have those levels in place, but for my strategies, they never hit. Risk management gets a little bit trickier when you also want to use leverage. So what leverage is borrowed money that your broker is giving you just for putting money with their broker. Let's say you're using Robinhood. They have one-to-one leveraging. So if you put $100, Robinhood will also give you $100 to trade with. Let's say you were to buy a $10 stock and you were to buy $200 worth of that stock, so 20 shares. Your risk would actually be 50%. If that stock goes down 50%, you will actually be closed out of your trade. That is because you only have $100 in your account, then the other $100 was a loan. You can technically only lose $100 on the trade. If the stock goes from $10 to $5, on those 20 shares, moving $5, you just lost $100. That's your entire account. Your account gets wiped. Using leverage is definitely very risky, but also very lucrative if you know what you're doing and want to grow your account fast. I personally would never recommend taking more than 25% of the leverage that's given to you. I think anything more than that is excessive. But also, you need to have a system in place that you know how much you're going to risk before you even get into the stock, if you do want to do that. It is very important to make sure that you always know what you're doing so you never blow up your account or ever get discouraged from trading. To recap, if you're buying stocks, you're never risking more than 100% if you're not using leverage. And if you are using leverage, however much cash you have in your account is how much you can lose. If your broker is doing 1 to 2 leverage or 1 to 3 leverage, it doesn't matter. The max that you could lose would be $100. So you always have to take that in consideration before you ever use that. I'll also be covering risk management when it comes to shorting stocks in a future video, but that's a little bit more tricky because stocks could go up to $100,000. So your loss could technically be infinite. So your risk management system has to be a little bit different if you are shorting stocks, and I will be going over that in the future. If you guys have any questions or want to know any more information, there will be a link down below going more in depth on the process of how to get started with the call out. Drop a comment, like, and subscribe to be a part of the Wolfpack. Thank you for watching and have a great, productive rest of your day.
Bye. Have a beautiful time.